Today, I will be showing you this amazing strategy that gives a lot of winning signals. This strategy made 77% win rate within a short period of time. It was backtested 200 times. And it is very easy to understand. I recently discovered the strategy as it uses just 2 indicators, which makes it very easy and user-friendly for beginners. I will backtest it 200 times with an initial account size of $1,000, with a 1.5 risk-reward ratio. Please make sure to hit the like button and subscribe, as it really helps the channel. Okay guys, so for today's strategy, we would be looking at the Ethereum, and we are on the 15 minutes time frame. So for this strategy, it is actually simple and easy to understand as it gives high win rate values. For this strategy, we would be using just 2 amazing indicators. One of such indicators gives out the signal, while the other indicator filters the signal to give the best entry points. And this filter indicator is one of the best volume indicators to use, although it would not let you take a lot of trades, but be rest assured it gives you the best possible entry it could generate. Now let's go ahead and add the indicators to our chart. For the first indicator, go ahead and search for the ADX and DI. This one right here by Backtesting. This is an average directional index. As this is our main indicator, this indicator will probably be used to know what trend we are on. Keep watching as we explain how we use the indicator on our chart. Now for the second indicator, go ahead and search for the heat map volume. We will be using this one by XDECal. Like I said earlier, this is one of the best volume indicator you would see on TradingView. Now let's go ahead and adjust the settings for these indicators in order to pinpoint the best possible entries for the strategy. Now go ahead and double click on the ADX and DI. The length we are using is 14 and the threshold is at 20. Now head over to the style. I want you to untick the ADX, as we will be using just the DI reading of this indicator. Now go ahead and change the level to 18 and also the color to white. When you are done, go ahead and click on the OK button. Now for the heat map, we won't be adjusting the settings, as it is perfect on the default settings, though you might want to adjust the settings if you would want to use it on a higher time frame. Now let's go over how these indicators work, as we would be revealing the valid rules for entry later on this video. Now for the DI, when the green is above the red moving average, it shows we are in a bullish trend, and when we see the red above the green, it shows we are in a bearish trend. Also, when it's above the white line, it shows that there is more momentum in the market. Likewise, when it's below the white line, it is a sign that there is less momentum in the market. Now for the heat map, we would only be making use of the yellow, orange and red histogram as they as signs of high volatility in the market, as the red histogram tends to mean extra high volume, and yellow to be medium volume in the market. The blue histogram show when the market is cold, as there aren't much volume in the market. And for those of you that might be wondering why our candlestick changed color, well, it's due to the heat map indicator, and this is good because it would help for better visualization, although it is still the same with the histogram. Now let us quickly go over the rules for our entry, as we would be backtesting the strategy at the end of the video. For a buy signal to be valid, we would want to see the green moving average cross above the red moving average, while both MA is still above the zero line. Then we would want to see our red MA move below the zero line, as it shows less momentum on bearish and more momentum on bullish market. Before we would enter our trade, we would want to see a yellow, orange or red histogram from the heat map, and when we get it, we would go ahead and place a buy stop at the peak of that candlestick. So we see here that we met our conditions, as the green MA crossed above the red MA at this point, and we waited till we had the red MA move below the zero line, and we got our entry signal at this point where we got a yellow histogram from the heat map. So we would go ahead and place a buy stop at the peak of this triggered candlestick, and our stop loss will be at the recent swing low, while take profit levels are at 1.5 times the risk, and as we can see, it was a successful trade. Please only trade when there is a signal from the volume indicator, as it helps to eliminate bad signals, just as we have seen here, although it would stop you from entering good trade signals as well. But not using it this way does more harm than good to your trading account. And also, we only enter trade when we get the cross above the zero line, as well as when one MA trades below the zero line, while the entry signal remains above the zero line. Now let's quickly go over the rules for a valid sell trade. For a valid sell trade, it is exactly the opposite of a buy entry. We would want to see the red moving average cross above the green moving average. While both MA is still above the zero line, then we would want to see our green MA move below the zero line, as it shows less momentum on bullish and more momentum on bearish market. Before we would enter our trade, we would want to see a yellow, orange or red histogram from the heat map, and when we get it, we would go ahead and place a sell stop at the bottom of that candlestick. So we see here that we met our conditions, as the red MA crossed above the green MA at this point, and it was not long till we had the green MA move below the zero line, and we got our entry signal at this point, where we got a yellow histogram from the heat map. So we would go ahead and place a sell stop at the bottom of this triggered candlestick, and our stop loss will be at the recent swing high, while take profit levels are at 1.5 times the risk. And as we can see, it was a successful trade. We can see that the heat map is doing a great job at eliminating bad signals. Now let's go ahead and do some more examples, to make you better understand the strategy, before we head over to our backtesting of the strategy. So we see here that we got the red crossing above the green MA over here, and we could see when we got the yellow histogram from our heat map, we still had the green above the zero line. We waited, and when it crossed below the zero line, we had no volume to enter the trade, as we went ahead to enter a sell position at this next volume signal, so we would be placing our take profit and stop loss levels. Now traders, I hope you understood how the strategy works, as we would be backtesting this strategy with an account size of $1,000, and we would be covering 200 backtested trades, as we use 1% of our account size on each trade. Let's dive into it. So we just finished the backtesting for this strategy, and we can see that the results are amazing. We had a win rate of 77% in 200 backtested trades, having won 155 trades and lost 45, which made us 187% return on investment. And I found those wonderful trade setups within 9 months, although commissions and spread fees would eat up some of the profit in real trading, because it was not included in the backtest. So you definitely want to expect that number to be lower when trading live. The profit factor for this strategy is looking good, I guess. And we had 6 wins in a row against 4 losses in a row. So yeah, I'm definitely happy with these results. Okay traders. That's it for today. Thanks for watching, and see you in the next one.